please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. Watching Trading Hour on CNBC TV18. Well, it's turning out to be a crackling start to the week, and in fact, the Nifty is at fresh all-time highs again. In fact, on a year-to-date basis, the Nifty is up around 25% and we have the mid-cap index, which has outperformed on a year-to-date basis as well. A steady advance decline ratio is what we have in today's trading session, and we have a lot of stocks to discuss in the next 1 hour. Reliance Industries, top of mind, IndusInd, and obviously Bharat Financial Inclusion. That you're seeing that diverse sort of reaction come into today's trading session. Not to mention a lot of results as well today. So, for example, Bharat Finance and Federal Bank as well, and the likes of DCB also, which will be coming out with numbers. So quite an action-packed day, not to mention week, because we have the likes of Axis, which is coming out with numbers tomorrow, as well as Bajaj Auto. Hi, Prashant.
Hi, and festivities begin, right?
Yes, absolutely.
Okay, let's just take a look at the market, which is because right now the market is selling off and coming off in a pretty large way. We were up at the high point of the day today, which is 10,243. The Nifty was up about 66, 67 odd points or so. From being up 66 points, we're up 16 points. So 15 odd points, is all that we've left. And I mean, the story is developing. And it's been a pretty sharp kind of slide. It's been going on for the last, almost 30 minutes or so. I mean, began at about 10:30-ish and then has proceeded to sort of eat away most of the gains that we have. 50-odd points off the day high is where we sit as we begin this edition of Trading Hour on the right now. I just want to quickly put up just two graphics. One is what has moved in the last 1 hour. Stocks which have moved the most in the last 1 hour, both up and down. I mean, if you can have that. And then the index point contribution, both positive and negative. And I think that will tell us the whole story about what's been happening. First, if we can have what's moved in the last 1 hour, that graphic, before I go on to the index point contribution. There you go. This is what's moved in the last gainers this hour. Can we have the losers as well? I think Reliance will be a significant it would figure somewhere on the top of the list there. Asian Paints, HUL, Bharti, Maruti, HDFC, I think half an hour would capture the sell-off more precisely. Now, can we have the index point contribution? Because top of the list in terms of what is putting pressure is RIL, Reliance Industries. Axis Bank follows at number 2, IndusInd Bank at number 3, HDFC at number 4, Yes Bank, SBI, Maruti follow after that. I mean, actually, the top 6 odd losers, with the exception of Reliance Industries, are all financials. And that's where the pressure is coming back once again from. The Nifty Bank, which on Friday looked like it had kind of sailed through all the turbulence because it was not performing really the few days preceding that. That kind of sort of looked very strong on Friday. It's again the trouble spot. 0.5% lower on the Nifty Bank, 24,575. And the big pressure is coming from stocks in that particular index. Let's get into Sudarshan Sukhani then straight away on the top of the show as always. Sudarshan, thanks very much. What do you make of this selling that we are seeing? And I mean, what would that mean really for the uptrend that we saw on Friday and before that?
Yeah, good morning again. See, the selling could be random. It could simply be a reaction to lifetime new highs. I mean, the markets do cool off. So I would not put too much stone in it. Traders should be long in the Nifty, and the way to protect that trade is to have a stop loss, which is 10,100. So while the Nifty is above that, these market choppy movements sometimes will come. The market broke out of a 3-month trading range on Friday. After such a breakout, it's quite possible that the Nifty may pause and become choppy and consolidate, but the trend remains up and the breakout so far has not been challenged. But the Nifty Bank is a different story. In the morning I said we will not touch the Nifty Bank, it's underperforming, and that remains. I would simply focus on the Nifty and completely avoid the banks.
Okay, fair enough. Well, I think that pressure is coming in from Axis in particular because it comes out with numbers tomorrow, and I think the street is watching out for the watch list slippages, which were at around 2,500 odd crores last quarter and had increased from 1,245 crores in Q4 of the previous fiscal. So I think the street is going to be watching out for that very closely. In fact, you can see that the stock is just about testing around 500 rupees at this point in time. So Darshan, you're staying away from banks, but if somebody has a position in Axis, what would you recommend to them?
Well, if you're a long-term investor, these small blips will keep on coming. Stay with your positions in all the private sector banks. If you're a short-term trader, as I've said, the Nifty bank is not to be bought, and that applies to all the private banks also. Just avoid them.
Okay. What would your recommendations be in terms of stocks?
Well, it's not the financials this time, everything except that. Bajaj Auto is a buying opportunity. First of all, we must understand the Nifty is at lifetime highs, all-time highs. You've been talking about it. So this is not a time to short sell. We need to buy. Bajaj Auto is a buying opportunity. Cipla and Jubilant Foods, which had a pause, a consolidation, is now renewing its advance again. Be on the buy side of the market.
Okay, stay long, don't try to short. And that's basically the broad structure of the advice from Sudarshan. Let's get some Twitter queries addressed then. We have Anmol Pawar, who has 90 shares of KEC International, and he paid about 308 rupees a share for them. He wants to know where the stock can go in about a year's time. Your advice, Sudarshan, KEC.
Well, I think the stock will simply consolidate in the next 6 months or 1 year, because the sharp rally that we have seen and the multi-bagger gains that have come have to stop, and they have already paused. If you see the charts, the stock has been consolidating. I would assume it will remain in a range between 300 to 350. Once you leave out the 1 year time horizon, if you are willing to wait and hold for 3 years, it will be an outperformer again. But for the next 1 year, expect consolidation.
Okay, well, Sudarshan, the next question we have is from Shweta. She wants to know the right time to enter Avenue Supermarts and the mid as well as long-term target for that stock. Remember, it came out with numbers as well over the weekend.
Well, Ekta, I wouldn't know the right time. I wish I had bought it when it was listed. After it was listed, clearly all the time was right for it. But just purely if he is willing to wait, perhaps 1100, a dip towards 1100 would be a far better location. There is support there, and I would assume that there will be a dip to this price. This is an outperformer, even though the price history is less, but still, and I would expect a target of 1500 on the long term. But he can wait and buy on a dip. It will pause.
Okay, let's get some futures and options strategies now. Sudarshan, thanks very much. Good to speak with you, as always. So Rahul Shah is Associate Vice President, Equity Advisory Group at Motilal Oswal, and he's here with us. Rahul, thanks very much. What would you be recommending?
I think the two sectors which is doing well is we've seen auto, finance, and other one is metals. So metal packs has been continuously be on an upbeat. So today also we saw a lot of gainers in the metal packs. So in that space, I think Tisco hitting again a 52-week high. So I think Tata Steel is one stock that I've been liking it. So one should go long Tata Steel with at stop loss of 705 and target of 740. Second is banks. We have seen a lot of, I think, correction right now. But I think private sector banks look still, one need to buy at a lower levels in that, and a small cap bank. I think Federal Bank is one which we've been liking again. We've seen stock after consolidating between 112 to 115 now is on up move and got into a new territory. So I think the longs have added in Federal Bank, so it can go to 122 odds or levels or so. So buy Federal with a stop loss of 115 and target of 122. And third is telecom. We saw some good momentum on Friday, the longs in Bharti and Idea. So I think Idea looks more convincing rather than Bharti. So I think I would go long with Idea with a stop loss of 79 and target of 85.
Okay, fair enough. Rahul, we're going to leave it on that note. Thanks very much for joining in, taking us through those strategies. Well, Rahul did mention Idea, and it seems as though it's a lot about the other telecom stocks today. Bharti Airtel, for example, is continuing its rally. So it's up around 2% odd. In fact, gained around 13% odd this month itself. 66
odd points before 10:30 this morning. We sold off to being up just about 15 points. So 50 odd points given up from the top of the market. And now we are picking up a little bit again. So 10 points added in the last a couple of minutes or so, we are back at about 10,191. The high is 10,243 today. We're still off the highs, but I mean, it didn't go into negative as it looked like it would cut through easily. So that's where we are at this point in time. We just are going to look at commodities, but I mean, Ekta was pointing out Axis, and I mean, that surely is the top of the losers list right now, 516. And Axis took months of effort before it finally kind of sort of pulled past that 500, 505 kind of zone. It was finding it extremely difficult. It got to about 525. It's back down again with results which are tomorrow. Indesit is down 2%. PNB, it's all financials with the exception of Reliance Industries. It's pretty much all financials which are putting majority of the pressure. Okay, let's get in Manisha now with the roundup of all that's happening in the commodity and currency world. Manisha, good morning. We're talking gold today.
Well, yes, we are, and we have seen the prices gain up yet again. Remember, we are looking at 1,300 back in case of the international markets, and the Indian prices as well are inching towards 29,500 there. And starting 12th of October, you have the BIS, which is the Bureau of Indian Standard Act as well, getting mandatory when it comes to the precious metal products. So whether it is coins or jewelry, you will see hallmarking getting mandatory here. As of now, of course, there's a bit of a crunch when it comes to the numbers because there are only 500 hallmarking centers across the country. And if you look at the number when it comes to the jewelry guys as well, only 20,000 of the 3 lakh jewelers as of now have a BIS license. So now that it has been made mandatory, you will of course see a lot of jewelers now rushing in to get themselves accredited or getting in a BIS hallmarking there as well. Just to give you some more numbers, if you now have a BIS license. So now that it has been made mandatory, you will of course see a lot of jewelers now rushing in to get themselves accredited or getting in a BIS hallmarking there as well. Just to give you some more numbers, if you look at FY 2017, 3.1 crore pieces of jewelry were hallmarked. That means that is 465 tons. And that also means that nearly 108 crores worth of jewelry was hallmarked. Nearly 10% of this goes to government as hallmarking. And remember, hallmarking is not done as per weightage or grammage. 35 rupees per a piece of jewelry is how hallmarking is done. So it's as low as that. And that is what the government is trying to push at this point in time. Also, if you look at the previous year, we saw Indian consumption lowest in last 7 years for 2016. So we are working with a lower benchmark right now. 2017, the last few months have seen increase in imports coming in. And this is that quarter that you would see buying in gold and jewelry actually run up. So even as the wedding season kickstarts from the month of November, you will see a bit of a preponing of that buying, especially around the auspicious days. And that is one reason that the global markets are also watching out for. And you have seen a premium build up in case of the gold prices. T. Gnansekhar as well joins us to talk more about that. Gnansekhar, hi, what is your sense when it comes to the gold prices right now?
Well, to me, unless there's an escalation in the North Korean tensions, I don't think we'll see too much of an upside. But having said that, I'm not pessimistic on where gold prices could head in the short term. It looks like, it could edge towards 13, 15 or maximum $13, $30 on the upside, which is like possibly 300, 400 rupees from present levels. So 30,200, 300 is something which we're looking at in the near term. But all depends on how the tensions in North Korea are going to escalate. If that does happen, I think there's a lot of upside. But in a scenario when it doesn't, and there is going to be just rhetoric happening, I think most likely gold prices could fizzle out because we have a possible Fed rate hike in December.
Gnansekhar, also, while it comes between gold and silver, most people this year have been betting high in case of silver prices. And while we have been meandering around that 40,000 rupees per kg mark, what is your sense? Where do you see both of these precious metals now closing this year? And if somebody was to buy this Diwali, what kind of returns can we really expect by the next year?
Well, this is a question which keeps coming very often. So, it's very clear that silver is still underpriced compared to gold. And that makes it a compulsory buy all the time when we see a potential opportunity, which is why it tends to run higher also in terms of return. So with the kind of industrial applications that silver has, I would still go with silver. In a basket, I would increase the size of silver in the investment, and that's how one should look at it. And as far as the Diwali returns are concerned, I think it's gold which could deliver better returns in the shorter term.
And anything in sense of percentage returns that we are seeing, would you rather put it like that?
It's a difficult call. Like I said, and it all depends on the escalation and conflict. So, having said that, I think we're looking at a possible 3 to 5% in gold and close to 3% in silver going forward from here.
Okay.
Okay, all right, Manisha as well as Gyanashikar, thanks very much for joining in, taking us through all of those strategies in the commodity space. And Manisha, I'm looking forward to you wearing some gold earrings.
Oh, absolutely. Tomorrow, as tomorrow comes, you will see me in a bling.
Okay, we need to take a break now, but we're going to be focusing on the new kid on the block, which has actually debuted with over a 20% gain in today's trading session. Godrej Agrovet is the one that we're talking about. Well, it's turning out to be a steady session because we've climbed back to 10,200 at this point in time. So we've retrieved back to those levels, and the Bank Nifty has also come off the day's low. So we're down around 0.3% and 0.2%, and compare this to around a 0.4% fall. So you can see that actually emerging in terms of a dip which is being bought on the Bank Nifty just in the past couple of minutes. But just want to shift focus to the broader markets. One stock which should come up for you is Suven Life Sciences. There was some news about them receiving a patent from New Zealand or some other country maybe last week, and since then the stock has actually zoomed, Prashant. It's up around 13.5% even now, and in fact if you look at it on a year-to-date basis, it's picked up around 30-odd%, majority of it in terms of gains coming in the second half of the year. So that's what's happening with Suven Life Sciences. Again, very similar in terms of the new chemical entity play, etc. But let's move on from equities then. In an exclusive chat, the PMEAC member Surjit Bhala says that there is no need for a quick fix solution to boost growth, adds that the slowdown is not as severe as it is being made out to be.
The one culprit, if you will, in the growth slowdown, and I think the most important culprit, is the increase in real interest rates. You know, inflation since 2013 has declined by 700 basis points. 700. And, if you will, interest rates have declined by 200. Now, it doesn't take a genius, mathematical genius, to find out that real interest rates have really, really gone up. Indeed, today, real policy rates in India are the second highest in the world.
Okay, so Surjit Bhala, of course, now part of the Prime Minister's Economic Advisory Council, a man who's believed for some time that rates, high rates, real rates, as he put it in his interview, are the big real culprit. Okay, let's get in Ashwini Gujral of ashwinigujral.com, who's now joining in. We are hitting Ashwini a little early today. Ashwini, thank you for your time. 40 points, coming back, clawing back, I should say. I mean, you know, at one point we were up almost 70 points, 50-point sell-off. We are sort of slowly coming back. But what do you make of this volatility, if anything at all?
See, basically, this rally started from 9,700 and we went to about 10,250. So, you know, that's 550 points. Now, you know, a lot of the rally is probably spent. The way I look at it is that probably 10,180 may not have the kind of buying. We just tested those levels, and maybe we go back in, a few people again get jittery, and you know, some shorts come into the system, and around, you know, 10,000, 10,050, if we can get down there, possibly you know, that would make the market healthier, and then we should be able to resume our upside, because it's very difficult to say how a 12-13-day move can move substantially higher. So even if the move happens, it will be labored. The way the Bank Nifty has come off, I think about 250 points from the highs, that's a bit disconcerting. That kind of makes you feel that probably we are ready for some amount of correction, but that will get confirmed only if 10,180 is not held. Once that goes, you know, everybody is long, because everybody heard on television that there was a breakout, and then, you know, the decline intraday could be harder. So chances are that for the moment the rally seems to be getting over, but a 2-3 day consolidation can happen.
Stocks?
On stocks, metals are doing extremely well. So JSW Steel is a buy with a stop of 260, target of 275. HUL is a buy with a stop of 1255, target of 1290. And REC is a sell with a stop of 157, target of 145.
Okay, well, we have a couple of Twitter queries, Ashwini. Let's get to that. Srinivas, 1,500 shares of South Indian Bank bought at 23 rupees 7 years ago. What's your advice on that?
Well, he hasn't done great in 7 years. Probably would have been better off in a fixed deposit. But if he wants to do a bank, I think being in one of the better banks like a Kotak is much better. You know, often people tend to buy these 20 rupee stocks thinking they will become 200, but you know, that never really plays out. Rather than, you know, it generally plays out in about 5% of the cases. So I don't think South Indian Bank is really running up in any sort of hurry. So it's worthwhile trying to get into a better stock.
Okay, another question is from Swapnil, who's got 50 shares of ITC and he paid 340 rupees and wants your advice, Ashwini.
Yeah, he's probably caught the top, and that was a top because of a reason, because you know, GST etc. Rates were lower. I doubt he'll get 340 back in a hurry. If I were him, probably I would move into an HUL. Similar stock, but much better setup and a much better situation in terms of a new high. So even here, there's a problem because he's 20% off his buying price.
Okay. Ashwini, a couple of these mid-cap pharma stocks are doing very well today. I mentioned Suven earlier, but Syngene is also above its 200-day moving average. Anything that you're liking or you want to recommend?
See, Pharma's day in the sun is over. Pharma does well, or Pharma and IT do well when domestic economy is not doing as well. I mean, that time was 2010 to 2014. You have, these individual, plays which do well one day, next day, something else happens somewhere else. You probably need great insight to know which pharma stock will continue to move up. Suven, after a very long, accumulation, consolidation, is moving up. So if all goes well, maybe 300, 320 is possible. But you want to do things where the whole sector is moving up, where there's great amounts of tailwind. A good example is metals, where all kinds of metal stocks are going up. That's much easier to do rather than, figure out which drug is going to get passed by FDA.
All right, thanks very much, Ashwini. Appreciate you joining in and running us through that sort of list and, of course, answering those questions as well. It's a strong listing for Godrej Agrovet. I mean, actually, it's the first listing from a Godrej Group company in almost a decade, 9 years to be precise. The stock listed at a near 40% premium to the listing price. Priya caught up with the management. Listen in.
Yeah, revenue mix is already changing as crop protection business, dairy business, and oil palm plantation business is growing much more rapidly than the rest of the businesses. So the salience in top line and bottom line is changing. Having said that, I think the long term we should look at dairy, chicken and animal feed together, because I think in some way in next 5 to 10 years it will evolve.
About your top line, you've been seeing a growth CAGR of about 16% over the last couple of years. What is the kind of revenue growth trajectory that you have going forward?
I think we will aggressively pursue both organic and inorganic opportunities which come our way. Future is not the extension of past, but definitely we will try to repeat the same performance what we have done in past.
Would you aspire to hit a sort of 20-odd% kind of growth, or what is the kind of vision in terms of revenue that you hold?
The vision is to be a fast-growing agribusiness company, and we are well on way to that. I think organic growth will definitely be upwards of 10%, but I think in case you're asking me 20%, we will have to seriously look at inorganic opportunities to get to that number.
What about profitability? How do you see profitability moving? 27 to 30% has been the kind of band for profitability, but going forward, what kind of trajectory do you expect?
So most of the business we operate in are highly profitable, and we believe that the salience of these businesses is increasing because of the rapid growth in top line and bottom line, and I'm very sure that profitability will be good in future also.
In terms of your margins, what would be the comfortable margin band that you would like to operate in over the next couple of years?
So we have been maintaining close to 7 to 8% EBIT margin, and I think we are likely to continue the same percentage in future.
In terms of the dairy business, I know you all have made an acquisition and you all have been focusing a lot on growing the pie as well. Going forward, what kind of vision do you hold for the dairy business?
Dairy business is a very new business in our portfolio. We are still in the process of learning the business. The branding and value addition is going to be a focus in that area. We would continue to be in the areas where we are in, that is the 4 southern Indian states, build the business, learn the business, and then think about expansion in this business.
When you speak of your overall portfolio, it is linked to a lot of climate change. It's linked to a lot of, the business environment as well. So, in terms of your overall growth, how do you think you can de-risk this kind of business?
The business is already de-risked because of the portfolio. You are absolutely right, because there are several events in each of our portfolios which can derail us, and the biggest one is monsoon. And with the portfolio of businesses, and now we are building a portfolio of products within businesses which will hedge us from at least monsoon, which is the biggest challenge in the sector. In other areas like bird flu, etc., I think sufficient amount of work has been done by companies as well as the government. I don't see that as a big challenge in future.
What do you think about palm oil prices? That's also been quite volatile.
That's part of life, and volatility in oil prices is something which is not new to us. We know how to manage this volatility. And the other good thing about that business is that it is based on a formula, which is based on a price. So as the prices come down, our payout for the fruit also comes down. So in some way, the formula provides some kind of a hedge.
Okay, well, strong listing for that one. The issue price was 460 rupees, and one of the reasons for them to list is actually to reduce their debt to equity going forward as well. We have Naveen joining in to give us more perspective, to give us more of the fundamentals, and just tell us more about Godrej Agrovet. Naveen, over to you.
So, Ekta, the stock has in fact come off its highs, almost 8% off its highs, still trading at around 30 to 33 times 1 year forward. Now, talking about the company, remember primarily 53% of its revenue comes from animal feed, which is again a very low margin business. The EBIT margin in this business is around 6%. The company is constantly trying to move towards a crop protection business, but still it's only 15% of its revenue, although higher margin business. The other businesses include dairy as well as poultry business, wherein they have 49% in the JV with Tyson Group. Now, talking about the financials of the company, remember they have seen steady growth, almost 20% CAGR in the last 2 to 3 years on top line as well as on the bottom lines. ROEs have also been healthy at around 25 to 30%. So no complaints in terms of the financials. And remember, now with the debt going, there will be a big uptick of around 300 to 400 crore debt is what the company is trying to reduce. But the main concern being valuations. Even with the fall in from the top, it's currently trading at around 33 times FY18 multiples. So 33 times looks expensive for a primarily commodity business. Back to you.
Naveen, and that is assuming 20% top line growth.
20% top line growth. The assumption is on the premise that if for the last 2 to 3 years they have continued a 20% run rate, and the management also expects that going ahead it will be at steady as. Yeah, they'll continue this.
Market is still off the highs, but it's also off the lows. The 37-38 points on the Nifty, 10,205. When we began the show at 11, we were up only 15 points. So we've added about 25 to that. Let's get Rajesh Kothari, Managing Director of Alpha Accurate Advisors now, who joins us. Rajesh, thanks very much. Good morning. Good to have you here. So we'll get to the markets in a bit, but any thoughts on the IndusInd Bharat Financial deal? Now, I mean, anybody who comes to buy Bharat Financial would maybe he wants to indirectly buy into IndusInd, otherwise no real reason to buy Bharat Finance except arbitrage opportunities, etc. So what are your thoughts on IndusInd Bank from here? Because I've read commentary which kind of, weighs both ways. Some say risk profile goes up, sure it does, but it is also a pretty small percentage of IndusInd's book.
Well, without getting much into stock specific, I think the deal is basically overall is going to be a good deal, because if you see the entire banking space, you will keep seeing the consolidation like this, particularly from the microfinance side or even from the smaller banker side. The game is going to be, the big is going to become bigger, and the companies which are more what I would say risk discipline in terms of the asset quality, surely they'll be the first target for any company who are doing acquisitions like this. So I think the pie is going to be much more concentrated now as we go, move forward over next 3 to 5 years. You will keep hearing a lot of joint ventures, you will keep hearing a lot of acquisitions, you will keep hearing the alliances. I think that is going to be the name of the game. So overall, I think it is a good deal from the industry perspective, and I think the growth is going to be much stronger going forward.
So how are you, Rajesh, positioning yourself when it comes to private banks as well as NBFCs and MFIs in order to play this opportunity that might emerge even more?
Well, we are very bullish on this space, particularly the consumer side of private sector banking. So we are not holding any bank which are into corporate lending primarily, but banks which are more focused on the consumer banking. We are also positive on NBFC, which is particularly on the consumer financing side of it. So except housing finance, which is a space which is going to be very, very competitive, where probably you might see a risk of, I would say, reduce the net interest margin going forward. Overall, we are quite positive on consumer banking space.
Okay, and what else, are your top sort of bets really? And try to drill down to, you can't talk about stocks, but as close to stocks as you can, just to give our viewers an idea. Yeah.
Well, I think there are many pockets in the markets which are delivering 18 to 20% earnings growth. So contrary to the perception that there is no major earnings growth for Sensex or for market in general, I think that's a wrong perception, because actually if you drill down to BSE 500 companies, more than 150 companies have delivered 15 to 20% positive compounded earnings growth across 3 years, 5 years and 10 years. So there are a lot of pockets where earnings growth is still very, very strong, and therefore we keep identifying the companies which are of course very strong management and strong quality of companies with such strong earnings growth. If you look at companies, for example, in auto ancillary space, the space which we are very bullish from last so many years, it keeps delivering very strong growth. If you focus on the consumer facing companies, whether it is in tiles, whether it is in plywood, whether it is into FMCG, discretionary spend, whether it is into the retail space, I think that space is also quietly doing well, and we believe that it will continue to do so over next 3 to 4 years. So these are the few pockets where we are very bullish.
Okay.
One more pocket which is increasingly gaining traction is the specialty chemical companies. And I think it is going to be a structural positive shift from China to India because of increased cost at the Chinese end. So I think here also there are many companies within the space who are probably like a monopolistic kind of a situation. There are only 3-4 players catering to that particular segment within each of their specialty chemical companies. And I think that space is also going to do quite well over next 3 to 5 years.
Okay. Rajesh, is telecom out of the woods?
Well, I think we all are watching telecom space very closely. What is most important is what is going to be a return on capital employed at the end of 3 years once this kind of a war zone gets over. And that's where we are still a little bit concerned. We don't think that the current ARPU level, current growth level will give enough room to existing top 3 players to make 18% plus return on capital employed. But yes, that's a space under watch. And moment we believe that there's a potential to do that, probably it will come under our portfolio. Till that time, right now, it is a more of wait and watch.
Okay, fair enough, Rajesh. We'll leave it on that note. Thanks very much for joining in, taking us through the fundamentals of the market, and wishing you a happy Diwali as well. We'll take a break now, but up next we're going to be focusing on Axis Bank. Remember that is actually one of the top losers on the Nifty. Before we went into break, we promised that we're going to get you a heads up on what to expect from Axis. Remember that stock is the top loser on the Nifty now. Numbers tomorrow, and the street is watching out for one word, actually 2 words only: asset quality. Abhishek is here with us to tell us what we can expect and what the key concerns might be, Abhishek, even when it comes to asset quality.
The key concern, Ekta, would be the non-watch list slippage. See, the non-watch list slippage in the previous quarter was at 2,722 crore. So this was the highest quarterly slippage run rate that Axis Bank has recorded. So more from what is coming from the watch list, the non-watch list book, how it performs will be seen very closely. So asset quality, you know, the watch list was at 9,500 odd crores, which formed about 2.5% of the book. How that behaves will be taken very keenly. Over the last 3 quarters, you know, the NII growth has been in lower single digit, and our poll also suggests NII growth of just 5% growth on a YOY basis. So NIM, which has been at 10-quarter low, how that performs will be seen very closely. Gross NPA below 1%, below 5.1% will be positive. Last quarter it was at 5.03%. Remember that the net profit is not comparable YOY because last year in the same quarter they had a huge provision which led to decline in net profit by 85-90% at that point of time. So therefore our poll suggests more flat trend on a quarter-on-quarter basis in terms of net profit.
All right, Abhishek, thanks very much for that. That's Axis Bank,
so
which
I think
reports
non-watch list slippages would be the most important thing to watch out for.
Okay, we'll take a very quick break here, and we come back with more when we return. What's happening with the oil marketing companies, big sell-off and some recovery, IOC, HP, BP, all pretty much at days. At 39 points right there on the Nifty, we're at about 10,200 plus. In the run-up to Diwali, we have been getting you some of the biggest voices from Dalal Street to find out what they have made of the market this year and what they think is lined up next Samvat. As we wind down on this edition of Trading Hour, we leave you with this special conversation between Nimish Shah, my colleague, and Shankar Sharma. Thanks very much for watching.
You know, I'm not making a case for infra overall, but you have to pick and choose. You know, the trouble in infra is that you don't have any assets. Infra companies don't have assets. They have only contracts and projects. So therefore, in trouble, there is very little that somebody can recover. My view was I don't even touch it because there's no recovery coming out of those. So infra, yes, carefully picked, and particularly pick where you can see that the debt can be addressed. Not via large equity issuances or a debt for equity swap, because that won't help. Look for places where large amounts of receivables are going to be recovered by way of arbitration, or some assets, some project can be sold to settle with the banks.